Have you ever thought about buying a home, but you're not so sure in this day and in this time and in this hour? Today, in this video, we're going to talk about mortgage rates and what's going on with the mortgage market and give you some helpful things that can
might encourage you to go ahead and buy at this time.
Yes, as we're moving into the spring buying season. But if you stick around to the end, we're also going to go over some tax benefits and some good tax information that's coming out of Florida. Hi, I'm Donald Nally, and this is my wife,
Katie Nally.
And we're licensed Florida realtors. And if you're thinking about buying a home or if you're not sure, contact us. Our information is in the comments below, whether you're thinking of moving
in a few days or if you're thinking of maybe not for 6 or 7 months. We'd love to hear from you. And we would love to tell you what we know about the market here in Florida.
Okay, so here we go. Back in January, we witnessed the national mortgage rates start to dip for the first time in 6 weeks. According to Freddie Mac, back at that time, the rate on 30-year mortgages fell to 6.96% from 7.4% the previous week. Borrowing costs on 15-year mortgages also dropped to 6.16% from 6.27%. So why talk about mortgage rates?
Because elevated mortgage rates are a major discouragement for home shoppers. High mortgage rates can add hundreds of dollars a month in costs for borrowers. But the good news here is that we're going to go over how the rates have been dropping since the third week of January.
Yes, and by the end of January, mortgage rates eased for the second straight week in a row. The rate on 30-year mortgages fell to 6.95%. And rates on 15-year mortgages fell to 6.12%.
Even though the rates eased for the second week in a row, it was still just below 7%, which was little relief for prospective home shoppers looking ahead to the spring shopping season.
Yeah, then on February 6th, we've seen mortgage rates dip again for the third straight week.
The average rate on a 30-year mortgage went from 6.95 down to 6.89, with rates on 15-year mortgages going from 6.12 to 6.05%.
Yes, in the following week, February 13th, we've seen 30-year mortgage rates continue to decrease.
Good news. The average rate on a 30-year mortgage fell to 6.87 from 6.89, but rates on 15-year mortgages rose to 6.09 from 6.05, Freddie Mac said.
Yeah, and mortgage rates are influenced by several factors, including how the bond market reacts to the Federal Reserve's interest rate policy decisions. The average rate on a 30-year mortgage briefly fell to a 2-year low last September, but has been mostly hovering around 7% this year. That's more than double the 2.65% record low the average rate hit a little over 4 years ago.
The 30-year mortgage average rate slipped to an 8-year low in February 20th.
Eight-week low.
8-week low.
To an 8-week.
Freddie Mac said it fell to 6.85%, its lowest level since December, and eased for the 5th week in a row. A year ago, a 30-year mortgage averaged 6.9%.
Yeah, this decrease is It's an encouraging sign for prospective home shoppers as the spring home buying season gets underway. The spring home buying season is traditionally the busiest time of the year for home sales. That's good news.
Rates on the 15-year mortgages also eased this week. The average rate fell to 6.04% from 6.09 last week. So it actually dropped lower than it was 2 weeks ago. A year ago, it averaged 6.29%.
Yeah, and so see, we're right up to par on this article because we are at that week of January 20th, going into the last week of February 20th. Going into the last week of February here. And so, but rising home prices and elevated mortgage rates have kept many prospective home shoppers on the sidelines, especially first-time buyers who don't have equity from an existing home to put toward a new home purchase.
The average rate on a 30-year mortgage is now at its lowest level since December 26th, when it was also 6.85%. It briefly fell to a 2-year low last September, but it has been mostly hovering around 7% this year.
Yeah, this stability continues to bode well for potential buyers and sellers as we approach the spring home buying season, said Sam Cater, Freddie Mac's chief economist.
The inventory of U.S. homes on the market climbed last month to its highest level since June 2020, according to data from Redfin. But mortgage rates and prices remain an uncomfortable combination for many would-be home buyers.
Yes, purchase activity was higher than year-ago levels, but many prospective home buyers are waiting for supply and affordability conditions to improve meaningfully before jumping into the market, said Bob Broschmidt, the MBA CEO.
How can buyers secure the best mortgage rate?
Although rates remain high, buyers can work to secure better ones by improving their credit scores and lowering their debt-to-income ratios, among other things. Here's some tips from an article by the Conley Publishing Group that will help you as a consumer to secure the best mortgage rates.
Read your credit report and improve your score if necessary. Many prospective home buyers save up for years in anticipation of the day when they will purchase their own home. During this period, buyers can read their credit reports and address any discrepancies while taking steps to improve their credit score. Lenders consider a host of variables to determine credit worthiness, and credit history and credit scores bear significant influence. The higher the credit score, the more favorable the mortgage rate one is likely to receive.
You can also take control of your debt-to-income ratio. Debt-to-income, or known as DTI in the real estate world, ratio refers to what you owe in relation to how much you earn. The lower your DTI, the better you look to lenders. According to Bankrate, lenders typically want to avoid issuing mortgages to individuals if the monthly payment will exceed 28% of their gross monthly income. Those near that threshold for a given home may be denied a mortgage if their DTI is too high. Prospective home buyers currently carrying significant debt, including consumer debt like credit cards and or student loan debts, should make a concerted effort to pay down that debt prior to applying for a mortgage. Prioritize paying off consumer debt before applying for a mortgage.
And maybe hold off on buying a big ticket item. Maintain a strong employment record. Steady employment and consistent earnings make mortgage applicants more attractive in the eyes of lenders. If you are currently shopping for a home or about to make an offer, now is not the best time to switch jobs. Self-employed individuals and freelancers working multiple jobs can still qualify for a good mortgage rate, but they may need to provide more extensive documentation that indicates their earnings going back several years. Individuals who have been working full-time for the same company for years may only need to provide W-2 forms from the two most recent tax years.
Shop around for rates. Rates may not fluctuate much between lenders, but it's still worth shopping around for mortgage rates. A study from Freddie Mac, boy, that's a tongue twister, from Freddie Mac, found that the benefits of shopping around for a mortgage rate were especially notable in 2022 compared to the decade prior, saving borrowers who took the time to shop for rates substantial sums of money, and we all like saving money.
Yes.
Talking about mortgages, we wouldn't be complete if we didn't warn you about the scammers that's out there. An article from Florida Realtor News by Amy Conley, using the FCC as a source, came out with the headlines.
FCC, be wary of mortgage scam calls. The article went on to say that scammers have impersonated over 400 mortgage institutions nationwide stealing hundreds of thousands of dollars from underwriting homeowners.
That's a lot of people out there doing dirty deeds to try to scam people out of their money.
Yes.
The Federal Communications Commission, the FCC, who put out this article, issued a warning to homeowners about scammers posing as mortgage lenders threatening foreclosure if they don't pay up.
It's called the Green Mirage scam. Fraudsters call the homeowner and pose as the homeowner's mortgage provider. The FCC said often the homeowner has previously sought relief from their actual mortgage lender and may expect to be contacted. The callers frequently know details regarding the homeowner's name, address, and their current or former mortgage lending institution. Callers also spoof the caller's ID number of the homeowner actual mortgage lending institution, further convincing the homeowner of the call's legitimacy.
Yeah, the scammers threaten foreclosure, but then offer relief if the homeowner makes specified payments, which are directed to Green Mirage's agents. The scammers persuade the homeowner that they need to pay in a manner different from their usual mortgage payment method. Most commonly, the callers demand the homeowner pay by mailing money orders to third-party attorneys, and representatives, or uploading funds to a Walmart Green Dot money card account. In perpetrating its scheme, Green Mirage has impersonated over 400 mortgage institutions and caused hundreds of thousands of dollars of losses to deceived homeowners. Many victims only learn of the fraud when their actual lender initiates foreclosure proceedings.
Some of the scam clues for consumers. Consumers should be aware that they are likely talking to a scammer if the caller pressures you to provide money or information, or if they ask for payments through unusual methods or channels, or third, offers a deal that's too good to be true.
What to do? If you have received a possible scam robocall or call using a spoofed telephone number, do not share any personal or financial information with them. Don't do it. If you're not sure, hang up and call the institution using their publicly available legitimate phone number. File a complaint with the FCC, the Federal Communications Commission. And the source of this all came from the FCC.
Yes. Now let's get into some tax advantages for homeowners in 2025. Sources over at Nexstar Broadcasting put out a helpful tax advantage article titled Possible Tax Advantages for Homeowners in 2025.
Yeah, the article went on to say costs like mortgage interest and personal property taxes up to a certain limit may be deducted to reduce tax bills, plus some home improvements in certain cases.
The 2025 tax filing season is underway, and there are several tax benefits that can help homeowners save money. Homeowners can deduct costs like mortgage interest and personal property taxes up to a certain limit in order to reduce their tax bill. In certain cases, home improvements can also be deducted.
Keep in mind, if you want to deduct home ownership expenses, you'll have to opt for itemized deductions on your tax return. Most taxpayers claim the standard deduction, which is a flat amount based on your filing status. If you think your itemized deductions may be higher than what your standard deductions would be, then it's worth running the numbers and figuring out which option is best for you.
Yes, and then mortgage interest deduction. The interest portion of your mortgage payment is tax deductible, but it requires you to itemize your tax return.
Yeah, the mortgage interest deduction is a tax incentive for homeowners, and it lets you reduce your taxable income for the amount you've paid in mortgage interest during the year, not for the actual cost you paid for the house, but the loan, the interest that you pay on the loan.
On your loan. Generally, you can deduct interest paid on up to $750,000 worth of your principal on either your first or second residence. For those who are married and filing separately, the limit drops to $375,000. The limits are higher if you bought the house before December 16th, 2017.
There are several criteria your home loan has to meet to qualify. For example, you can't deduct any mortgage interest debt whose proceeds did not go toward the construction, purchase, or improvement of a home.
Also, if you bought points on your mortgage, you may be entitled to a similar tax deduction. You'll find a summary of your mortgage interest payments on Form 1098, which lenders send around the end of January. So you should have already gotten it.
Who benefits from this deduction?
The benefits of the deduction go primarily to high-income taxpayers because high-income taxpayers tend to itemize more often, and the value of the deduction increases with the price of a home, according to the Tax Foundation, a Washington, D.C.-based think tank.
For perspective, just 7.5% of taxpayers making under $200,000 itemized in 2020, while 45% of taxpayers making over $200,000 itemized, according to the Bipartisan Policy Center.
Then we have state and local tax, or it's called SALT deduction. Homeowners who itemize their tax returns can deduct the property taxes they pay on their residence up to a limit. The state and local SALT tax deduction allows taxpayers to deduct up to $10,000 of the money they spent on certain state and local taxes, including property, income, and sales tax.
Yeah, those who take advantage of the SALT deduction have to choose between income and sales tax. You can't do both. You can't deduct both. Before the Tax Cuts and Jobs Act, the TJCA, there was no cap, but now the minimum SALT deduction, the maximum SALT deduction is $10,000. However, that cap is set to expire at the end of tax year 2025.
Who benefits? Depending on where you live, the property tax deduction can be valuable. Taxpayers with higher tax liabilities in areas with higher state and local tax rates tend to see the most significant benefits from the SALT deduction. Before the TJCA, 91% of the benefit of the SALT deduction was claimed by those with income above $100,000 and concentrated in just 6 states, according to the Tax Foundation.
Yes. Now, necessary home improvements. You can't write off the new sofa that you purchased that spruced up your living room, or the supersized big gigantic screen TV that you bought to watch the Super Bowl on. You can't deduct those items. But some home improvements, so-called capital improvements, do have tax benefits.
According to the IRS, an improvement must add to the value of the home, prolong its useful life, or adapt it to new uses.
Certain capital improvements considered to be medical expenses can qualify for deductions. Think of necessary upgrades like installing an entrance ramp or widening a doorway so a wheelchair can pass through. That's for medical purposes.
Yes, other upgrades that make your home more accessible may qualify as well. Projects like adding railings to a bathroom or installing modified smoke detectors for someone with hearing issues.
Homeowners may also be eligible to deduct upgrades to their home office if it is in their main place of business.
Generally, capital improvements expenses are depreciated over time, meaning the full cost of the change is divided by its useful life, and that's the amount you can deduct in a given year, according to Investopedia.
Yeah, remember, capital improvements and home repairs are not the same thing in the eyes of the IRS. Repairs are changes like painting a room or fixing a leak, while improvements add to the home's value or prolong its life, which sounds like what they're doing outside our office here. They're out there working on a house, doing roof work and everything, and so that's a major improvement, having a new roof put on. That adds to the value of the home.
Right. Green energy upgrades. You could be eligible for a tax credit if you made energy efficient improvements to your home. Unlike tax deductions, which reduce your taxable income and are based on your tax rate, tax credits directly reduce the taxes you owe and don't depend on your income.
Yeah. If you've installed new energy equipment to your home like solar panels, you may be eligible for the residential clean energy credit. That credit is worth 30% of the cost of new qualified clean energy property that's installed anytime from 2022 through 2032.
The credit is non-refundable, which means the credit amount you receive can't exceed the amount you owe in tax. There's also the energy efficient home improvement credit, which covers upgrades that reduce the home energy use. Improvements like insulation, central air conditioners, and exterior doors may qualify. It's a 30% credit up to $1,200 for changes made between 2023 and 2032.
Yeah, there's even a credit available for installing electric vehicle charging equipment at your home. The federal tax credit for electric vehicle chargers is worth 30% of the cost of the qualifying equipment, up to $1,000 per charging port. And that's some good news for tax deductions and everything. And now we're going to get into that good news coming out of Florida. My wife happened to see some wonderful things coming out of Tallahassee from Governor DeSantis.
Yes, Ron DeSantis has been talking about completely eliminating property tax. It's been discussed that it shouldn't be that elderly people who have owned their own home for a long time, and if they get to a certain age, they can no longer keep up the payments on those taxes, they can lose their home. And so it's being discussed, the idea of completely getting rid of property taxes so that those kind of situations can't happen anymore. And so we'll keep you updated on the developments of that. We certainly look forward to hearing more news on that.
Yes, and think about it. You know, when you buy a home, you pay taxes on it when you buy it. You know, you're paying the state taxes. The property taxes are being paid every year. So why should you continue to pay taxes on property year after year after year? If you bought the house and the land that it's on, why do you have to keep paying taxes on that piece of property?
Right. And Ron DeSantis has said that taxes is basically a local issue. And so this is a matter that has to be changed through the legislature, which he said he would support. But, you know, we think maybe it's a good idea to have a DOGE investigation on the local level too. You know, maybe funds are not always spent the way taxpayers would like them to be spent.
Yeah, but that conversation's for another day. But I would relate it to this. It's like when someone buys a motor vehicle, say they buy a car or a van, whatever kind of motor vehicle, they buy a motor vehicle brand new. 5 years, and when they bought that motor vehicle, they paid the dealership all kinds of taxes on that motor vehicle. Now they sell that motor vehicle. The person they sell that, say they sell it privately, it doesn't matter. They sell it privately to their neighbor. Now their neighbor buys that vehicle. The neighbor's got to go down here to the motor vehicle place. And what do? They pay taxes again on that same motor vehicle that was purchased and had taxes paid on it the first time around. Now the second owner owns that vehicle for a couple years. It's still in good condition. They sell it to a third person. That third person pays taxes again. We bought a 1978 motorhome a couple years ago, and this vehicle was 40 years old. No telling how many owners it went through. And guess what we still had to do when we went to give the price of the vehicle to get it tagged and everything, to put it in our name? We had to pay taxes again. Why do we have to continue paying so many taxes on so many things? We're just, you know, you can put your questions or answers or any kind of comments down in our comment information below there.
Right. We realize that, there are services that need to be taken care of. Fire department, police department, those kind of things, emergency services, those kind of things need to be taken care of. But we're looking forward to seeing the discussion on this as the future unfolds here.
Yes, I mean, our take on it is if it's your homesteaded property that you actually live in,
Yeah.
you shouldn't pay taxes. But if you got rental properties and everything else, then yes, maybe you should pay taxes on them. I don't know. I don't have all the answers to this. Or like you're from out of state and you only come down here for the winter, but you own property down here and you're not actually living here. You're not a resident of Florida. Then yes, maybe you should have to pay taxes on that. But those decisions are not up to us. We're just putting some thoughts out there, some of our own thoughts of what we think about this, and I don't know. We'll see what happens, like my wife said, and we'll keep you updated on this topic as more and more news comes out of Tallahassee.
Yes. We look forward to bringing you more news in the future.
Yes.
Thank you for coming along with us and finding out some information of how things are improving here in Florida.
Yeah, and like we said at the beginning, if you're looking to buy, sell, lease, we're here to help you. We're here to serve you. Again, we are Florida licensed realtors, and you can get all of our information in the comments below and in the description of the video. And until next time, this is Living on Florida's Treasure Coast. Bye for now.